and also start the recording. Yeah, it's an early morning, but that's what the London session is like every day. So let's see. Kept holding support on this little bullish fair value gap. We have the midnight level coming in. Okay, I think something's... yeah, okay, because the UTC setting is now -5, because America also shifted or turned their clocks back by 1 hour. So we actually have to set this to 1 until I update the entire indicator. 0, 1, 1. And now the midnight level should be happening right here. Yeah, perfect. We have that midnight level. We have all these equal lows lining up with that midnight level. That's all done. The daily opening comes in right here at this level. I don't need to see that really. We took this buy side. We're at the high of the day. Midnight level, our current market structure shift level here for the 5-minute time frame. We took this buy side. Right here we have our high of the day. Make this in text size 12. Yeah, and I think now we should be good to go. If we keep on making higher highs and higher lows, that's not an issue. We just move our market structure shift level up with us. If we do not get the market structure shift, we simply don't trade on this account today. And yeah, leave it at that. Good morning, Ulrich. We keep on moving higher from the inefficiencies that we leave behind. That really comes or stands out here. We have this little bullish value gap. We tapped that after running the Asia session high. So we could have also seen a reversal here already, but we didn't. Momentum continued to be bullish. Bullish value gap right here. And then we made a higher high, leaving behind new inefficiencies. We tapped the inefficiency and we continue to run higher to our current draw on liquidity, which I would say would be this bearish value gap and the current high of the day coming in at 438.3.75 with these two relative equal highs. So a scalp from here to here would already net 2.75 points. Not bad. 2 mini contracts. Your 5 points would be done before the draw liquidity would even be hit. Right now, let me log into my Apex account because I have a click over here to MES because I still need a couple of trading days on these accounts. Those are the ones where I played around a little bit and passed a challenge within 1 day. And there's no consistency rule with Apex to get funded. But once you are funded, there's that 30% consistency rule. So I can simply go over here and click the buy and sell buttons, enter a micro position long on this account and switch over to this one and go in with a micro short. Let it play out. I'm well above the profit target here, so I can actually happen to lose 300 bucks. And on this one, I can lose 113. Just letting it sit here for 5 minutes so it counts as a valid trade. And I also have this 100k static account. We will see if I use that today. maybe this is sort of my scalping account where I would take trades like this, just following the momentum. Bullish fair value gap, we continue further to the upside. But right now, I just want to get this over and done with. If it's a loss, if it's profit, it doesn't matter to me. It's just about, yeah, getting a little trade in, since I'm already above the profit target. It's an approach that can work. It's a, I don't know, normally, let's say, for example, with trade day or take profit trader, you spend like $100 on a funded account challenge. If you really want to skip the challenge phase, it's possible to simply buy 5 Apex accounts. You spend $100 roughly, and if you have a good gut feeling that price is going higher, enter with 10 mini contracts and see if it plays out. If you reach your $3,000 profit target, nice. The account is above the profit target, and you can simply do the same stuff that I'm doing right now. And for the remaining 6 days with micro contracts, and simply wait until you get the email where they ask you to pay for the activation fee of $150, I think. And yeah, then you get the funded account. But afterwards, you cannot take these. I don't know, maybe you can call them YOLO trades. I think that should be enough right here on this account. That will count as a trading day. On this account, we actually even managed to make some profit going short here. And now we're done with those accounts. Time to log back onto our trade day accounts. That one is super fresh. I just signed up for it yesterday. Really also to test the challenges. Profit target of 2,500. Minimum trading days of 10. It's the highest amount of minimum trading days in the industry. But as long as you stay below the 30% consistency rule, meaning that your biggest winning day cannot exceed $750, 30% of your profit target in overall profit. Let's say you make, for example, 1,500 in one single trading day, or 2,500, then you simply have to increase your profit target because you made more than 30% in one single trading day. So simply $750. $750, you would end up at 1,500. Another time $750, and then on the 4th trading day you make 250. You reach your profit target within 4 days. That's still fine because you still maintain the consistency rule of 30% of your overall profit target, even though you just traded 4 trading days. And then you simply do micro executions. Many ways to play this game. If you have any questions about that, how that works, feel free to ask. And Q took out the high that has been left behind at 6 right here. Opened up and had this little push to the upside, and Q cleared that. While ES, let's actually look at ES did not do that. Right here, that's the high, the relative equal highs, our draw on liquidity, paired with the bearish fair value gap. We just touched the low of the bearish fair value gap, but we didn't get up into the high of the day. It's still 20 minutes, 15 minutes now until London opens up. Right now, we're still looking for a market structure shift to happen below this low. I would prefer price making a, well, really, if we maybe drop to the 1 minute time frame, we could also treat this as a higher low. Right here we form a high, a higher high, and a higher low. So looking at the 5 minute, we can identify this as a short-term low. It has a lower low, higher low to the left and a higher low to the right. Same as this one is right here. compared to this candle's low, we have a lower low to the left and higher low, and a lower low to the right. But this candle is a short-term low because we have a lower high to the left and a, sorry guys, it's early in the morning, a higher low to the right and a higher low to the left. Same as this one right here. And same as this one down here. Or this one. Or even this one or this one. Higher low to both the left and right. Right here. Those are the levels that I identify as a valid market structure shift. But I wouldn't expect the market structure shift to happen until the London Open. I will also wait for the close below the market structure shift level and see how big the stop loss would be. Maybe I also have to switch over to the micro contract. So maybe I keep MES set open so I don't have to rush the process later on in case the stop loss is going to be a little bit bigger. I'm planning on risking $250 per trade to make 500, at least a 2-to-1. I'm gonna secure partials. So if I were to enter with a close below here, ideally also below this bullish share value gap that kept on holding support. We enter on a bearish share value gap, target something like a 2-to-1. Here we have the low of the day. This would be the overall target, the best case scenario target. Doesn't always mean that we run into our best case scenario target. We could also simply take out these equal lows and continue back up. But the overall target would be a simple 2-to-1, $500, risking 250. You will likely also see me sometimes taking a 1-to-1 risk to reward. Simply because I don't think the setup is there or the momentum is there to actually continue to drop towards the low of the day or to the 2-to-1 risk to reward profit target. But we will really see how this plays out. We open up with the bearish volume imbalance. 245. Let's take a look at NQ. NQ also seems to be rejecting here. Also has this short-term low with a higher low to the left and a higher low to the right. Low of the day. Previous day's high, previous week's high. Same for ES up here. Where's the previous day high? Midnight. Right here. Previous day, previous week's high, coming in at 4391.75. For our bearish value gap, we talked about that on the weekly outlook. For our buy side liquidity, daily buy side liquidity, and a daily volume imbalance, and I think even further up. Let me see here. No, it's not loading up. But like I said, we already talked about that on our weekly outlook. That's where these drawings come from. Daily time frame. Right here, that's the daily buy side liquidity I'm talking about. If we go to the daily buy side, daily bearish fair value gap, new week opening gap. And if we drop down to the 4 hour, we see that 4 hour short-term high with a lower high this time to the left and a lower high to the right. So this wick stands out here. We also have relative equal highs right here, comparing to our Friday high and this high, like this. Daily bearish fair value gap. We can see the 4-hour bearish fair value gap right here. That's what I have on my ES set chart. And overall, regarding the bigger picture, if we zoom out here, we have the trend line with 1, 2, 3 touches. We bounced off the 50% of this entire move to the upside, measured from the low during October last year to the high during July this year. You can see this trend line. 50% is this purple line. We went below the 50%. We took out that sell side liquidity below this little reaccumulation. And we had one of the second most bullish week on the S&P 500 looking at the weekly candles. So we will see what that means in the future. And right now, all eyes, for me at least, are on the 50% of this entire retracement, below the 50% of this expansion, which comes in right here at 4,400 basically. We see major resistance around this level. We have 4-hour buy side liquidity. We have a new week opening gap. We have a daily bearish fair value gap. We have daily buy side liquidity. We have the trend line coming in and the 50% of this entire retracement move to the downside. If we can manage to close above all that, I think it should be smooth sailing to continue up higher, taking out more and more trend line liquidity above this high, this high, this high, and this high, working our way towards 4684. If we take a look at that on NASDAQ, we also spoke about that in a weekly outlook. Giving a short recap here, we saw we formed these lower highs and lower lows. We also hit the 50% of this entire move to the upside. This blue line and purple line. Now we did not hit the 50% of the full expansion from October to the July high. We only hit the 50% of this area right here where we measure from the high to the low. Has been used as resistance previously. We broke above it. Now we started to retest it and actually got the most bullish week on NQ here, looking at the weekly chart so far in the year 2023. Monday, Tuesday, Friday, Wednesday, Thursday. And right now we're also at the 50% of this overall retracement right here. If we take a look at the weekly, we also see that trend line with 1, 2, 3 perfect touches. NQ is looking, or is stronger than ES. It's already at the trend line. It didn't retrace so much. ES, relatively speaking, retraced all the way down to this low right here, the reaccumulation at the 50% level. So yeah, we will see what the indices will do. If we get a November-December continuation rally, if we take buy side liquidity after taking some sell side to continue even lower. But really, if we start to see that first push lower, second push lower, third push lower, followed by a market structure shift, fair value gap, continuation up higher, this looks more like a bull flag to me, a retracement after a expansion to the upside, or a 3 drives pattern where we have our first drive, our second drive, and our third drive, followed by the market structure shift, maybe a pullback, and a continuation towards 1800 or 17500, which is the all-time high for NASDAQ. Alright, we could be getting our market structure shift even before the London, or with the London Open, really. Let's see how that goes, if we can close below this low. If we only wick it, we have to wait for the London opening candle. Take a look at NQ here on the 5-minute time frame. NQ is doing that same thing, unfilled volume imbalance, took out the buy side liquidity, shift in structure, continuation lower. That's what I'm looking for. There we go. So we still have to wait 4 minutes until this candle is closing, but right now at least we would make a inversion fair value gap out of this fair value gap. We have a bearish fair value gap if we close like this or even lower. And we have a untapped volume imbalance. Right here we open up with a second bearish volume imbalance in a row, and we didn't get the retracement on this new candle to fill it. So a unfilled volume imbalance. But we want this to actually close below the market structure shift level. In order to place a limit order, I would place it right here on this bearish value gap. Stop loss would be only 2. I would put it 1 tick above here, so I could enter with 2 minis, targeting a 2-to-1. Taking some partials once we hit the midnight level or the equal lows. Yeah, that looks pretty good. But I want to see the close below for me to take a pre-London Open entry. Risk might be a little bit higher because this could simply be a liquidity sweep. That's why I wanted to close ideally also below this bullish fair value gap. If we now start to reject and close somewhere up here, then I think it's confirmed for me that this might have just been a liquidity sweep. It's hard to draw a breaker block right here. Oh, that would only be possible on the 1 minute time frame. If we look at the 1 minute. On the 1 minute we already closed below. But it's also really not that this place, well, maybe the stone closing candle would become our breaker block. But right here on the 1 minute we swept equal low, so we want to make sure that we actually also close below here on the 5 minute. We have 2 minutes to go. Let's see. London Open is coming in 2 minutes. If we close like this, we still have to wait. One and a half minutes to go. Take a look at NQ, also retracing further. We want to see that 5 minute time frame confirmation. Good morning, Herman. From Baltimore, nice. 50 seconds to go. Looking good. But prior to London Open, we can expect some volatility. We really want to wait for the confirmation close, then I have to be quick entering my position right here. On the new, yep, that's all correct. Nah, we didn't close below it. I cannot add my order right here. You can see that with that last tick, we didn't close below. So it doesn't qualify as a valid entry to me. We could still see it exactly playing out, but it's really all about the consistency. And since we didn't close below, I cannot take it. It's that simple. Even if we fill the bearish value gap and the unfilled volume imbalance now and continue all the way to the downside, this little series of day 1 of 66, being consistent, seeing how far it can take us. would make sense to already fail on that first trade when we do not see the confirmation. We didn't close below, so I count this as a liquidity sweep. If we would have opened up with a bearish volume imbalance, I would have counted it, but we didn't. We only got the setup here on NQ 5-minute time frame. We closed below. Unfilled bearish volume imbalance for the potential continuation lower. So now if we would have closed below, I would have been filled with both contracts. I would have placed one sell limit right here inside this bearish unfilled volume imbalance and one contract short right here inside this bearish value gap. But we didn't see the market structure shift confirmation. Anyway, we see it play out perfectly. We get rejected once we fill the unfilled volume imbalance. Right now, honestly, I would prefer price to continue up higher and not to play out because, yeah, I can't enter here really. Good. Now that we don't enter because, yeah, it doesn't match our rules because we didn't close below, I would actually prefer this making a new higher high and giving us a chance later on, maybe during 4 a.m. So I'm a fan of this because this backs up the theory that all this is right here is a liquidity sweep because we didn't close below here on the 5-minute. Of course, we closed below it on the 1-minute time frame, and you could get your entry maybe from this bearish fair value gap right here. Yep, and there we go. Continued making a lower low. Let's see how quickly we drop. Or if we drop at all. So if we now get the close below the market structure shift level, the setup would still be valid for me. I would have to pick a different entry though. And the entry for me, since we have filled this unfilled volume imbalance and this bearish fair value gap here on the 5, really would have to be the inversion fair value gap, so something like this. But I don't think we're done yet. We just tapped this lowest bullish fair value gap here in this price leg. Can also draw this in. Mm-hmm. 1 minute to go until this 5-minute candle is closing. Let's take a look at NQ here. NQ also happened to make a lower low. Filled the untapped volume imbalance. So right here we have the untapped volume imbalance and a bearish fair value gap aligned with that. And we started to reject once we reached that. The DXY on the daily, still no signs. We're still on a market structure shift level. Let's see. Tapping the fair value gap. Since we have now already filled the areas I was interested to enter on, I would now say I'm only gonna enter with one. So I'm gonna go short with one contract here of that market structure shift level. We could also use the inversion here really. Let's see. I'm gonna go for that market structure shift level for 380.5 for a 2.5 stop loss. But this time only with one contract. Target 5 points. because we have already filled all the inefficiencies, not leaving behind a new one inside this displacement leg. We had them, we filled them, now we close below. Take a look at the 1 minute. Looking good. And are we filled? Yep, we're filled. Let's see, half the risk, because, yeah, a little bit of a delayed entry. Looking for 5 points. 2-to-1 risk reward. From the high of the day to the low of the day. We close below the market structure shift level. High, higher low, higher high. If we would have seen, if this wouldn't be a low that stands out with a higher low to the left and a higher low to the right, I wouldn't take this entry. I would wait for the confirmation close below this level right here. But I deem it worth the risk. If we happen to close above both these areas now immediately and above the inversion fair value gap, there's really no reason for me to stay within this trade. And then I would decide to cut my risk early. We took a 15-minute low. We do not have a market structure shift on a 15. So we want to keep that in our mind as well. Higher time frame doesn't share these same tendencies. Take a look at NQ here. Yeah, but other than that, there's really not much we can do at this point in time. We have our market structure shift on the 5. We got our entry, unfortunately, not right at the London Open because we didn't close below. Otherwise, we would have been filled right here and right here. And because we have already filled that with the London Open and then got our valid signal, I only entered with half the risk. Because, yeah, both these areas have been filled. If we get back up into them, that's really not beneficial to us. Let's see if we get stopped out here. We took out this high one more time. Like I said, if we close above all that, I would cut my risk early. Otherwise, my stop loss is going to remain at 2.5 points. Let's see if we get rejected here. If not, I don't think really there's much between where price is right now and simply the continuation, and I can, cut my risk. Instead of losing 150, I can maybe lose 100 or $80 for this London session setup. Okay, we kept on holding this highest bearish volume imbalance and open up with a new bearish volume imbalance, so I will simply stay in this trade. We didn't close above. You can already see this is starting to look a little bit more bullish on the 1 minute time frame, 5 minute. And Q is still tapping this unfilled volume imbalance, so we could maybe see a SMT divergence between the both. We're just gonna hold on to this trade. A 6 point, no, that's not worth it. 5 points. And if that first trade happens to be a losing trade for the session, that's gonna wrap up the session for me. I'm not gonna take more than one trade for a specific kill zone. We can keep on watching price and maybe trade a different account. But for the trade day consistency account, I'm gonna stick to that. Let's see, we got stopped out, one tick. $125. NQ is now also pushing more strongly. And we should get stopped out. We're already at 125 with spread. No, not tapped yet. DXY is continuing lower. We got rejected nicely, but it's not over yet. Pretty sure we have a 1 minute fair value gap inside this. Nice 5 minute bullish. The trend is still bullish. Like always, the 2022 model is a counter trend setup method. We formed a higher high, higher low, and the next higher high. Displays below it, leaving behind unfilled volume imbalances and a bearish fair value gap. We entered after the London Open because prior to the London Open we didn't close below it. But I think over 66 days we shouldn't have a issue. Because the bigger picture is more important than what we make today. So really the point of this series is consistency, sticking to the rules. Are there any questions regarding this setup or maybe something else that we can talk about? Hey, Ryan. So you also deemed it as a valid 5-minute market structure shift. I know you've been doing the same thing on your Take Profit Trader account. Last week we had also a similar trade during London, or the same trade, and it played out nicely towards the Asia lows. And yeah, then it just comes down to playing the probabilities. NQ rejected. We had a bearish value gap right here. So what we wouldn't want to see is a bearish SMT divergence taking out this high, while NQ is making a lower high right after the London Open and continues lower, because that would mean we get stopped out on our ES short while NQ would have played out. Like always, wicks to the damage. Bullish volume imbalance, close above now or open above right here. I think we're gonna get stopped out on this one. At least on ES. NQ might still play out, but we just didn't get the sweep here. We actually closed below it after filling these inefficiencies. And yeah, eventually I think we're gonna continue lower because we have all these equal lows here. the equal Asia lows, the equal lows at the low of the day here on the 5-minute time frame. How are we gonna do it? It's gonna be up to price action, really. We could simply make a high, up, higher high, take out the high of the day, equal high buy side right here on ES, fill in this 5-minute bearish fair value gap, and then do exactly that. But we got the setup before, and it's worth playing it. And because we entered with half the risk, theoretically we could also still, take a second trade with also half the risk, because I'm willing to risk 250 bucks per session max. I see your point. The DXY is going for the previous day's low. We're almost at the previous day's low. The DXY could also simply continue to drop to take out this daily sell side liquidity. We're not that far away from that. Well, whatever price does, we don't have an impact after our entry. NQ though, playing out nicely because we have that same setup here. But we got the confirmation prior to the London Open, so there's that tiny little difference. MSS bearish. I don't trade NQ, but today NQ delivered nicely. We will see sometimes NQ, sometimes ES delivering better. Simply the way it is. I would need a second account to trade also NQ. We have our unfilled volume imbalance paired with our bearish value gap above the market structure shift level. We have our stop loss right here at this high, target a 2-to-1. Perfect, lining up with this sell side liquidity right here. Nice. We actually managed to reject. The DXY took out the low, so this could help. NQ made a lower low after the market structure shift paired with our bearish value gap after taking out this high. So we do kind of have SMT divergence between ES and NQ because ES didn't take out the high I'm referencing right here. So that's bearish SMT divergence. We take out the high. We get our displacement with a unfilled volume imbalance, bearish value gap. We kept holding resistance of the 50%. If we go back to the higher time frame of this entire movement to the downside, here this red line is the 50% of this entire downtrend retracement. That's where we stopped on Friday and started to consolidate. Getting rejected off here. What could we be looking for? I'd really just be looking for that last strong push, measure the 50%, which would come in roughly down here as a healthy retracement. If we go to the daily time frame, that would line up with a daily bullish value gap, a breaker block, or maybe just the 50% of this entire week. We will see. We're not going to be swing trading here, holding over several days. We're just looking for a, on ES at least, a 5-point scalp with half the risk. So that would be a $250 profit. Would be a nice way to start this entire series, gotta admit. Would be nice to have a first winning trade. And we close with a lower low. Not in terms of wick, but in terms of bodies. We got the lowest close at 4379. No, we closed at 4379.5. But we now do have the relative equal highs here. We will see. Take a look at NQ. Go back to the 5-minute time frame. See what our NQ short is looking like. almost already hit take profit. No, not almost already, but made a lower low, that's for sure. It didn't take out the 2 a.m. lows right here. It actually left, or did it? I think it did. And Q took out the sell side liquidity right here. We also have a bullish fair value gap paired with that. So this is basically our last level of support that we have to break through before we hit our profit target. And on ES, we get the push back up. Immediately rebalancing this bearish 5-minute candle. Now let's just wait and see. The DXY is continuing lower after taking that swing point right here. If we look at it on a 15-minute time frame, pump up prior to the London Open and immediately reject it. 5-minute time frame, took some last buy side liquidity, perfectly respecting that daily bullish fair value gap here on a lower time frame with that last pump inside that daily candle. Now we're below that. We keep on going lower. Okay, now we're gonna get stopped out, I think, because we have all these relative equal highs here. Come on, do your job. NQ likely swept liquidity here to continue its move up. We will see. Otherwise, we have more bearish SMT divergence here, which would help the short on NQ. And we get rejected again from that area. Crazy. 1-minute time frame. Let's take a look at that. I would be surprised if we leave all these equal highs behind and hit our take profit target. But I'm open for it. I mean, we will see. If you really believe we're gonna go short, also powered with bearish SMT divergence, you could also add some room to your stop loss, make a 1-to-1 risk to reward ratio out of it. If you think that we're just gonna sweep the high of the day, equal high buy side, and then continue lower, and you don't want to take, yeah, the stop out right here for 2.5 points, but that's not the way I would trade these 2022 models. But so far, lots cleaner on NQ. Messy London Open so far, push to the upside. Inside bar, push to the downside. Push back up. New unreads on Discord, strategy chat. Let me help Sue here quickly. I'm not trading my topstep account today with the YM strategy, but 2 a.m. Session Pro. London Killzone is starting again at 1, ending at 4. Let's see what we would have. I think we would have been stopped out here with my 1 bar stop. Yeah. And then we would have entered right again here. Now we would be sitting in a new trade. 2 to 1. Stopped. And then entry right here. 1 bar stop. 2 to 1. Keep that open. And once again, we are in profit. We've been in for a ride so far. But I appreciate, yes, not stopping us out at least yet. I don't want to call it right here and say, yep, nice. You're not going to get stopped out. I expected to be stopped out right here, here, and right here. It didn't happen just yet, so maybe we get super lucky here and miss our stop by 1 tick. But that's how it is sometimes. That's why some people also add 1 tick to the stop loss. I don't know, just to avoid getting annoyed and getting stopped out to the tick right here. But that's the beauty of working with futures, really, because we have a spread of 0.25 ticks here. But even though we had the spread, we didn't get stopped out. And even if there would be a news event, you don't get slipped like you would with a CFD prop firm, whatever, because they want you to fail. They put you on a B book and you're getting stopped out somewhere here already. That's why I really like the futures. I think it's hard to deny that. And we're back up. Now I can imagine, especially if you've been trading with CFDs, and that's likely for every trader out there the most annoying thing: spread, slippage, getting B-booked with CFD prop firms, especially if you trade indices. If you trade currency pairs, yes, I think CFD prop firms might even be better there, especially for the lower time frames, depending on which ones you trade. But still, yeah, you cannot beat zero spread and perfect execution. I remember I tested it out once on NFP Friday, also on a stream. It's somewhere on YouTube. I took a short prior or a long prior to NFP just to see how, because if you would get stopped out during NFP, CPI, FOMC with a, I don't know, the funded trader account, a CFD firm, and you're short S&P 500, it hits your stop loss right on that 8:30 news candle, you lose more than you initially risked because, yeah, of poor liquidity, slippage, blah, blah, blah. And I think B-book is when they put you on so they have a book and a B book in terms of, yeah, when you get filled, basically a priority and a lower priority book, order book for orders to be filled. They could manipulate that, not the broker, but essentially the prop firm, because most prop firms nowadays, they have their own MT5 servers. They get their liquidity. Like, for example, funding pips. I was also pretty surprised by that. It's a rising prop firm. They have the lowest 100k challenge price. and they say that they are partnered with Black Bull on their chart, on their website. And then I traded the S&P 500 using the Black Bull broker, but the charts didn't even match up. So the charts you saw on MT5 and the charts you saw on TradingView using the here SPX, no, not indicators. Come on, am I stupid? No, SPX, SP 500. I don't know what the tag for that S&P 500 Black Bull chart is. Anyway, the charts look different, even though apparently it's the same broker. It wasn't. I'm pretty sure that if you would trade with a regular Black Bull account, you wouldn't get a 2% slippage. I think that's only a prop firm thing. They debooked you for you to fail the challenge, for them to make money, obviously. Unless you're super profitable and they actually manage to copy your trades because you're that profitable and make profit with you. But really, in terms of probabilities, how many of the traders that purchase a 100k challenge with, for example, a CFD funding firm, are actually profitable traders? So it doesn't make sense to copy everyone's trade. Otherwise, yeah, I don't know. They'd be losing at least 90% of the time, because 90% of traders at least fail their first phase of a funding challenge. So every time you hear a CFD firm saying, yeah, we copy our traders' trades, yeah, bullshit. They take the opposite trade, or they simply put you on a lower priority order book, slip you, increase the spread, blah, 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 whatever. And yeah, you just end up with lower quality trades, which leads you to blowing your account, and they make $500 because you spend $500 for your challenge. It's easier than counter trading, or I don't know, it's not really, you'd need a super good algorithm to do all that stuff. I mean, who wants to copy the trades of all these unprofitable traders that fail their challenges? No one. Even counter trending it. Which trade are you going to counter trend? Are you going to counter trade the losing trade? Are you going to counter trade the winning trade? It's not that simple. For example, if Apex or Trade Day, if we do that same scenario here with Apex or Trade Day, which trade are they going to counter trade or copy trade? You cannot tell. We go short here. Counter trade, copy trade, based on what? Yep. So it's more simple for them, at least the CFD firms, to get their own server, adjust a few things here and there, slippage, spread, blah, blah, blah. Make sure that if someone goes in before the news, they actually get stopped out somewhere up here. That's what happened to me with funding pips, instead of losing 1%. So I entered the same trade on Euro US dollar with Apex, a futures funding firm, and on MT5 with funding pips, the exact same trade with the exact same stop loss. And yeah, news came in, I got stopped out on my Apex challenge, 50k with futures. I ended up losing exactly the amount, or I got stopped out or filled with my stop limit, basically right where I placed it, without any slippage, without any spread. And with the CFD funding firm, I got stopped out. Instead of losing 1%, I actually ended up losing 2%, twice as much. And by doing that, they can simply increase their profit margin. Of course, you could also avoid that by not taking pre-news entries, but yeah, kind of hard, because we have news every day most of the time. It's just the way the game works, unfortunately, but that's why I prefer futures, because even if we get a super huge candle, just running up here right now within 5 seconds or something, I would get stopped out on my trader account right here. While with CFDs, they see the opportunity, they take the opportunity and stop you out somewhere up there. And then they blame it on, oh yeah, poor liquidity, blah blah blah, like funding pips did with me. Yeah, we have multiple liquidity providers. We're not just working with Blackbull, even though we have our MT5 servers literally saying Blackbull demo. Yeah, I could go on and on about this forever, but I think the simpler method is simply to, I don't know, avoid getting fucked over and trade futures. Especially when scalping, I think futures are really superior to CFDs. With trade day and topstep, you actually get the chance of getting a funded account, a live funded account. You can choose that to actually trade live money. These companies offer that. CFD funding firms, they don't give you live capital. They don't have that available. They're all just some, I don't know. If I would have 200,000 followers on Twitter and YouTube, I could contact a broker and say, hey guys, I want to start a prop firm. I have a 200,000 people or trader big community. All I need is your backend. I'm going to set up a website where they purchase it from, and then they need demo account login details. I'm going to manipulate them a little bit so I have a lower pass rate, make money, and you get your cut out of it. That's basically how it works. I mean, who owns all these CFD funding firms? Influencers. That funding pips, the Scale It guy, funded engineer, T-Trades, skilled funded trader by these other, I don't know, it feels like shenanigans. Yes, you have the option. You can, just keep on trading your regular funded account. It's right here. If we go over to trade day and we head over to the resources, right here, help desk, and we would look for funded sim versus funded live account. Haha, South America, no tax on trading. Look, sounds like I'm gonna join you soon, Herman. Set up a little powerhouse down there. Trader house. Paraguay. Yeah, I've heard that too. Paraguay. What's that other one? Not Uruguay, Paraguay. Oh man. Panama. No tax. Green card with 5k. Easy. I can't believe that we're still in this. Take a look at NASDAQ. NASDAQ is now also looking a little bit more stronger. Let's just see what's happening. If we get stopped out, we get stopped out. Yeah. Dubai is going to change their 0% tax policy. I think they're gonna increase it to like 10% or something. if you set up that entire like firm structure. But first, we have to get there. Let's see what we can achieve within our 66 days here. Consistency. I think that's gonna lap over into 2024 even. Come on, stop us out. Get us out of this mess. This is just really not what you would want to enter on, but of course, this is hindsight now. We got our market structure shift, bearish fair value gap entry. We used half the risk because we filled all our inefficiencies before we got the market structure shift right here on this candle. But then we still decided to get in with price for the potential move to the downside. Didn't happen. And we hit our rejection area one last time. Maybe. Been there before. And Q now also looking much stronger. So at least nice to see that likely both setups will fail. And there we go. We're stopped out. We lost a total of $142. I think it's because I moved my stop loss one tick above and I didn't modify that. Stupid. Trading executions. We got filled. Yeah, one tick above our high. That's okay. So now we finally took that buy side. We still have the high of the day and the equal highs remaining. Low of the day. Asia equal lows. These equal lows right here. Option S. Trader weight 142. Let's journal that. Ooh, account login details. Good question. There we go. Accounts. Let's add a new account to our dashboard. Trade day 50k. Starting balance 50,000. Initial deposit date was today, Monday, the 6th of November. Is 66 consistent days. Live stream account. Add, and there we go. We add our first trade. Screenshot. We entered short with 1. We lost how much again? 142.08. 142.08. We entered short on a 2022 setup. We didn't make any mistakes. Just didn't play out during the London session. Let's add some notes. Entered with half the regular before closing below the short-term low for the valid MSS. Stuck in consolidation. All right, add the trade. There we go. NQ didn't take out the high just yet. I think that's still yet to come. But like we said, we could have also give it some more room to breathe, to even take out the high of the day and then reject. We will see we just got stop hunted here, took all these equal highs, took out this high at 235. We're done for the session, I think. For a new market structure shift to happen, we would have to close below this low right here. And I would like to see that, that to happen in case very aggressively, leaving behind a nice bearish value gap for me to target 5 points. But yeah, we will see. We'll stay on the stream for a little bit longer. It happens. We will see what we can achieve within these 66 days, taking the exact same setups over 66 days with the same amount of risk. We cannot expect to win on every single day. Today, a little bit unfortunate. We immediately get rejected from that area. Our NQ shorts would still be in play. So we have valid bearish SMT divergence. Let's get rid of these inefficiencies. None of this one hasn't been respected. The volume imbalance is not really either. The only one that kept holding support is this lowest bullish value gap right here. We can see that no candle ever closed below this bullish value gap. We closed right at the low and bounced off it a couple of times. So we can leave those two on our chart. This bullish value gap right here, we close below, above, below, above, below, above. So I don't really care about that one. We have a new hourly open soon, right here. It's 3:45, so let's see what's happening at 4 a.m. Yep, also first trade on my new trade day account. YM is rejecting now, NQ, yeah, I don't know. I would suspect this inversion fair value gap now to hold support to actually take out the buy side above this high. We don't have to really here on NQ because we already took out this short-term high right here over to the left. Now let's just see what happens. Our market structure shift failed. Let's take a clean look. Yep, we took our trade for the session with half the risk, so I'm gonna stick around. Maybe we'll see a second try. I'm not sure. I would like to see this high of the day being taken out before that. Until then, I'm just gonna remain on the sidelines. Would have to be a nice setup with a strong displacement, bearish value gap. Then I would target the low of the day here with the other half of the risk. Otherwise, that's just going to be it for this London session, and we will see what we get during the New York session this week. Day 1 of 66. London session, first losing trade. Small loss. Half the risk, so that's acceptable. Pushing back up. Like I said, we could also do the same thing on the 15-minute time frame. On the 15, we would have never gotten the idea for a bearish market structure shift if we look at this price action. We're still on the uptrend, therefore we would have had to take out this low right here. If we would bring that down to a 5-minute, it would be this low right there. Or this is internal stuff we see on the lower time frames, like the 5-minute. If you want to filter out and you want to take less trades, then I'd say the 15-minute time frame is made for you. We also don't have news on the calendar today, so let's see how that plays out during the New York session later on. Even if I make profit during London, I will still trade New York on the YouTube and Discord live stream. We'll see how that goes. But the XY is starting to reject now, or pull back at least. Can't really call it a rejection. We took out sell side. We have a bearish fair value gap. We have the Asia buy side liquidity above here. From our market structure shift. Five points, 1-to-1 risk reward. Yeah, I would really want to see if our direction was completely off, and after all this chop with that new hourly candle, we continue to expand to the upside. Let's take a look at the hourly time frame here. No 1 hour bearish value gap, but we have an order block up here, a massive down closing candle. High of the day, equal highs is really the easiest buy side liquidity pool it could take. 5-minute time frame. One-minute time frame. Yeah, just mess. Take out highs, lows, highs, lows. We have equal lows down here. We took out the equal highs, more equal highs, and also from over here, these equal highs. 50-50. Most important part is that we now don't try to force anything on that account just because we lost. Trying to not attach ourselves to the PL. We simply follow the plan and see where we end up, because if we do the same thing here on the 5-minute time frame, let's take a look, for example, at last week, Friday London session. I think was the trade that Ryan took. We had the exact same thing. We took out the Asia high. We closed below our short-term low. We formed a lower high, higher low to the left and a higher low to the right. We closed below, leaving behind our bearish value gap. London opens up and we continue lower, hit our 2-to-1. So on Friday, we would have been already up to R. During the NFP session, wouldn't really trade that with futures. I don't know, you could, because slippage isn't too bad. We form a low, a lower high, and a lower low. From here, really, the market structure shift would have followed once we close above this level, becoming our breaker block right here on this candle. We retest the breaker and we expand to the upside during the NFP news event. But we don't trade that. Here during Thursday, during the New York session, we didn't get a 2022 model. We simply continued to the upside. This is not a valid 2022 model because we didn't close below this low right here. During London, we took out the Asia sell side. We got a nice push to the upside, closing above this lower high. We made a lower low, pull back, kept holding support on this bullish value gap. It's really what you want to see, especially with that London open coming in. Same thing, leave behind the bullish value gap. We enter 2-to-1 risk reward. If that's not good enough for you and you want a market structure shift on a higher time frame, you would have gotten that once we close above here. We have our bullish value gap. We would enter here and we would have also hit our 2-to-1 risk reward. Stop loss below this low. The early entry would have happened right with the London Open. Done. So this way we would already be up 4R. Basically, yeah, $1,000 on that trade day account. Here during this New York session, we had the FOMC news event, and we also didn't really get the pullback for the 2022 model. We formed a low, a lower high, and a lower low. We close above, but we never really filled this unfilled volume imbalance or the fair value gaps we left behind. We only retested really the breaker block if we want to do this. Close above, retest the breaker block and expand to the upside right here with the 8:30 news that we got on this Wednesday. But once again, for the London session, we formed a high, short-term low, high, we close below the slow, we leave behind our bearish fair value gap just as we did today. We fill it and we hit our 2-to-1. So now we would already be up 1,500 on Wednesday. Let's see, and then during this New York session, we would have gotten a similar entry. We had our buy side liquidity taken prior to 8 a.m. It was a pre-New York Open entry, but I would also still take them on this trade day account. No matter where we would have placed our entry, the lowest bullish fair value gap or the highest bullish fair value gap or the breaker block right here, we would have gotten filled, unless, yeah, we would have chosen this highest bullish fair value gap, but low-hanging fruit entries always pay off. We choose the low of the breaker block, or we simply go for the lowest bearish fair value gap to make sure we're not going to miss out. We would have hit our 2-to-1 by 9:50, 20 minutes after the market opened up, continued lower. So now we'd already be $2,000 in profit if we would have started last week. Here during the London session, we took out the Asia low. We had our displacement right here with our breaker block. Lower low or equal lows, we take them right at the start of 2 a.m. and we get the strong push up, but without ever coming back in any of these two bullish value gaps until later during New York. So later during New York, we had the retracement where we capitalized on the short, taking out the sell side liquidity, and we delivered higher from our London 2022 model. This was Tuesday, up $2,000. And on Monday, we didn't get the London session fair value gap entry or market structure shift. We simply continued up, formed a low, a lower low, but we didn't close below it. So no reason for us to enter. And right here, we formed a high, higher low, higher high. We got our displacement, but we didn't get a bearish fair value gap with that. And that's really essential for me. If we just keep on going above the Asia session high at the high of the day, this would be our market structure shift. But for me to take an entry, I want to see that bearish fair value gap. It's up to the trader if they want the bearish fair value gap or if they simply enter on the breaker block. But this would have been otherwise a losing trade, which wouldn't hurt if we look at the rest of the week, having basically only winners or simply no entries. And then heading into the new week, right here also on a 5-minute time frame, we got our displacement with a bearish fair value gap. We take the entry, but this time we get stopped out. And that's just how it is sometimes. So right here on the S, we now took the equal high of the day buy side liquidity. NQ also had this push, 355. 5 minutes before the new hourly candle. So on NQ, it would have also been a losing trade. We have the new hourly opening. Let's take a look at YM. YM really choppy here. Last week we had a very beautiful week there. So what we would want to see now is a immediate displacement below the slow, a pullback into a fair value gap, targeting the low of the day or the equal Asia lows or these equal lows for me to get in a short. But so far on this Monday, a little bit unfortunate, but yeah, I don't know. Just by looking at last week, we see how powerful that setup can be if we simply stick to the plan and don't deviate from it. We can't expect to win 100% of our trades. Even if we just win 50% with a 2 risk to reward, we still end up profitable. Then it's really all about, focusing on a bigger picture instead of short-term gains. Push out the high. I logged into my Apex account now, the 100k static challenge that I purchased last week with a 2k profit target. That's my scalping account where I simply take quick scalps on either ES or NQ based on a 1 minute time frame. Took the buy side, starting to reject. The market structure shift on the 1 minute would really come in here. I will keep an eye on the 5 minute, of course, because if we see that displacement now after hitting our main buy side liquidity pool, right here with the bearish value gap on the 5 minute, there's nothing above. If we look at this entire displacement, also could line up with the optimum trade entry, and we see we continue lower after the sweep on the new hourly candle. We don't want to force anything, especially if we get the market structure shift below here. We want an entry at least around 4380.5, because otherwise our stop loss would be relatively big. Let's just see what price is going to do here. Now we have equal lows, push back to the upside. We have a unfilled volume imbalance here on the 1 minute time frame. A gap paired with a bearish value gap. Mm. 1 minute time frame here on NQ. Just looking like a regular pullback. No fair value gaps to enter here. And this is just messy, really, if we're being honest. 15-minute time frame, same thing. Sort of barcoding here, just going sideways with lower highs and higher highs, lower lows and higher highs. Still, eventually, I think we're gonna deliver into the low of the day from somewhere around this area. Just from a gut feeling, I would say. Look at the hourly time frame with the new hourly candle. Hide the indicator here quickly and our drawings. No hourly bullish value gap. Take out the previous day's high. Maybe. We will see what we get during New York for the trade day account. That's the last hour for the London kill zone. Do you guys have any more questions regarding the setups or the specific trade we took? We covered all the setups we saw last week on the 5-minute time frame that I took on the TPT account. But yeah, now it's time to properly start journaling everything on live streams. I will upload the entire recording on YouTube for the London session. I will be back at 8 a.m. New York local time for the New York session stream and see if we get a setup there. But looking at last week, yeah, most of the time we got our setups during London. Where did everything go? Here. London session, nothing during New York because we had news. London session, nothing during New York. London session, tough to get an entry with FOMC news during New York. So that's 3 out of 5 London sessions. Here we didn't get our London entry. If you would have, yeah, I don't know, leave your buy limit down here on these 2 bullish fair value gaps. The London session setup still played out really. Here we got the short during New York session, so that's 1 out of 5 trading days. And during Monday, we didn't get anything. For example, this right here, we had the push to the upside and the displacement lower. We had our bearish fair value gaps, but Monday without news, the entry would have followed at 11 a.m., end of the session kill zone. I don't really count this as an entry. I wouldn't have taken that because the range is just too big. We already almost hit the Asia low and our stop loss, let's say we enter on this bearish fair value gap, would be 12 points for a 2-to-1. I would have deemed that pretty unrealistic and therefore simply wouldn't have taken that trade. Or simply looked for a little 5-point scalp. I hope that makes sense. If we go back to the previous week, Friday, London session, we take out the Asia high, we close below our low, we leave behind a bearish fair value gap, like we did today basically. We get filled on a bearish fair value gap and we hit our 2-to-1 with our stop loss being at these equal highs. And afterwards we actually even got a long entry close above, leaving behind a bullish fair value gap, hit our 2-to-1. During New York, we found a low, lower high, lower low. Displacement right at 805. I know this is a news candle entry, but with futures I think you can't really do that if you want to. Otherwise you would just skip the trade because we already made profit during London. It keeps on repeating. It presents itself every day. Of course, we cannot expect every day to be a winning trade like we saw today. Like, for example, this London session. Our first trade, we took out the Asia low. We closed above our high, leaving behind a bullish fair value gap. We enter and we get stopped out. We continue to move lower with a lower low, lower high, lower low. We displace, leaving behind bullish fair value gaps. And that's where my low-hanging fruit entries come into play. I most certainly will add a buy limit here and a buy limit in this fair value gap. With our stop loss being at this low, just holding on to the trade, we would have still hit our 2-to-1. Very simple. That's first day. Once again, the London session shining here. During New York opened up. We started barcoding. Hard to call anything a displacement here on the 5-minute time frame. High, low, no bearish fair value gap up here, one up here, but I don't know. Doesn't look clean compared to this New York session where we take out the high of the London session right here. Boom, clear that high. Displays with 2 5-minute candles, leaving behind a bearish fair value gap. Have the VWAP as potential resistance as well. We tap and we hit our 2-to-1. That's the setups, the clean setups that you want to take. Right here during London, hypothetically, yes, we had the model. We formed a low, a high, a lower low. We closed above, leaving behind our bullish fair value gap. Right here, once we shifted structure, we eventually get filled and also hit a 2-to-1. But, well, we have to admit, if this is our model, this setup looks much more like the actual model that we want to take. This would be a interpretation of it. Because we actually form a higher high, we break the most recent low, fill the fair value gap, and continue lower. That's Wednesday. Here on Tuesday, we closed below the low, leaving behind the bearish fair value gap. We didn't continue to run, not even 5 points. Target 2 to 1 would have been before we even take the Asia sell side liquidity. Simply didn't play out. Very similar to what we saw today, actually. And then during New York, at the high of the day, we took out the high. We could have taken a short here, really. So this would be also a losing trade during New York. On Tuesday, closed below the slow after taking out the buy side prior to 9:30 entry. So it would have looked something like this. Looking for the 2 to 1 to take out the London sell side. Didn't play out immediately. We got stopped out with the 9:30 opening, holding support with the bullish fair value gap, continuing up higher one more time. And then really the entry for the short would have happened after my timing window, right here on this bearish fair value gap. We closed below the low that delivered into the previous day's high. Bearish fair value gap. Stop loss. I wouldn't have placed it all the way up here. Doesn't really make sense. But if the stop loss is that big, just going for a simple 1-to-1, hit a 1.78. I would simply target liquidity then. Asia low, London low. We took all that out. I don't, just because my risk reward is forcing me for a 2-to-1 all the way down here, which lines up perfectly with that liquidity right here. Still, that's the perfect scenario or best case scenario option. I would still take partials because on this trade with a 15-point stop loss, I would have entered with micros. Yeah, simply take partials once we hit sell side liquidity. And let's look at this Monday. We close below Friday's low. We get our displacement. Also a interpretation displacement. We form a low, a lower high, and a lower low. Leave behind our bullish value gap. We get tapped, but we get stopped out. And here during the New York session, we take out the London session low. We get our displacement, but on a 5-minute time frame, really without a fair value gap entry here. We only retested our breaker block for the continuation higher. We had a 15-minute fair value gap here, and the 2-to-1 would have also played out, as we can see. But so I hope you get the idea. Presents every day, 5-minute time frame. Not every day is a winning trade, but yeah, overall I think it's pretty good. The trade frequency is good and healthy. The win rate is healthy, so no reason for us to not trade it. Okay, so we're back up in this bearish value gap from here. If we look at it on a 1-minute time frame basis, built the inefficiency, close above the bearish value gap. Yeah. Nothing that we would like to take. Yeah, and I think really that's gonna conclude today's session. For the London session. Guys, do you have any more questions? Otherwise, it's gonna be it. YM, that would have been a second losing trade. $15-minute, higher high, higher low, 1 hour, volume imbalance. In case we get a beautiful displacement here now, close below. Yeah, really looking at market structure. Coming from here, we form a high, take the Asia buy side, form a low, form a high, just looking at the obvious highs and lows, not something internal. We pull back, form a higher low, form a higher high. So for a clean setup, this is what it would look like. Take out the sell side, leave behind a bearish fair value gap, and then continue lower. If we look at fractal market structure, like we did with our initial entry, short-term low, we pull back, we consolidate here, we get our higher high coming off this low, we pull back, we form our higher high, we leave equal lows behind, we pull back once again. So the market structure shift, fractally speaking, if we would look at it on a 1 minute time frame, I'd say comes in at this level. Once we close below that displacement, fair value gap, we could, if you want, if you're up for that, take an entry right there. But I think we're just better off waiting for the New York session, really. I will keep an eye on it, make sure until 5 AM at least. If we get the entry afterwards, who cares? We cannot sit here for 24 hours per day. And I will be back for New York. Go to the gym in the meantime, and yeah. So guys, do you have any more questions? We covered a lot today. We took a trade, losing trade. We covered the past 2 weeks of 2022 models here on ES on a 5 minute time frame. You can see the win rate is at least above 50% during the past 2 weeks. We got a setup almost every day, and if we do not get it on a single day, we do not have to force it. Here on a 1 minute time frame scalp basis, left shoulder, head, right shoulder. For the continuation lower, this is just what's standing out to me right now. Trade of 8, is it worth an entry? On my scalping account. Not really. 5 minute time frame. Let's wait for this candle to close. Take a look at NQ. No, not worth the entry for me on my trade day account. Take one loss and we stop afterwards. I think that makes most sense. Market structure shift would come in if we close below that low. We immediately retrace that entire bearish candle, but we've done that a couple times today, so kind of hard to trust here. No, I don't think it's even worth the scalp on the 100k account, to be really honest. 5 minute time frame on NQ. Displacement, yeah, short-term low broken, potential bearish fair value gap. But we could once again simply be forming our pullback to continue up higher. So it's not really worth the risk to me. Yes, I always take the first market structure shift coming from the high of the day. So right here, daily candle, high, got displacement. Really, this is the high of the day with the wick that we left behind at 6 PM New York local time. We could wait for a higher time frame PD array like the previous day high, previous day's low to be hit. Right here, we already took out the Asia buy side liquidity. That was enough for me to take that initial short. Yeah, maybe. I think I stuck around to see what we get here, since we now took out the high of the day, rejected off this 5 minute bearish fair value gap. If we manage to get the close below these lows, leaving behind a nice bearish value gap, I'd take an entry on that. But let's say, for example, we have our previous day's high. If this line would be the high of the day, equal highs, if that would be our previous day's high, let's just assume that, and we get a short right here, I would not take that. I would, like, I don't know, still judge a little bit subjectively how major the liquidity pool that's a few points above us really is. And that wouldn't be high of the day equal highs after taking Asia buy side already. I would still accept that and take the risky entry before that, because it's not a previous high, previous week, previous day's high. It's just the 6 p.m. opening wick, equal highs, bearish value gap. Got close enough to it. Displacement, a good shot. It's up to you. You can either wait for the higher time frame PD array to be taken out and then wait for the market structure shift, or you simply don't, like we did this morning. There's no right or wrong. That's just the way I do it, basically. Like, for example, here the higher time frame PD array would have really been the previous day's high, here from Thursday over into Wednesday, and here we just took out some buy side liquidity above the Asia session high, market structure shift. Really, we couldn't call this higher time frame PD array. That's why I simply go with that. Session liquidity taken, reversal setup, target the opposite session liquidity, and see what we do there. So after clearing these equal lows, we immediately get the push back up. If we look at it on a 1 minute time frame, we take it. We did not close below, we closed right on this low. Now we're back inside this bearish value gap, open up with a bullish volume imbalance. So what we would like to see is the bearish order flow, meaning these bearish inefficiencies actually to be respected now, and we keep on continuing lower to these equal lows right here. But on the 5 minute time frame, it would really be, it would need lots of imagination to claim that this is our market structure shift, unless, let's say, we get a very nice bearish candle, a new bearish candle with a 5 minute inefficiency, we pull back and then we continue lower. Then we could argue this way, but as of right now, I think we're better off staying away. And accept the losing trade this morning. Let's see if the trade day dashboard already updated. No, it's updating at 4:30 p.m. Central Time. Yeah, really want to see how trade day holds up here, because if we look at our comparison, let me take a look at NQ. Yeah, I would watch it. We didn't really close below here on the 5 minute time frame. We closed right at the low, and we open with a volume imbalance below with a strong rejection. So I wouldn't really count this as a market structure shift, but just for the continuity, we could still watch it, paper trade it. NQ behaves a little bit differently. It's more aggressive, more volatile. It could happen, definitely, like we said. Yes, reject from here, take the trend line liquidity, and continue lower. Let's take a look at the DXY. 5-minute time frame. We took the low right here on the DXY. That would be our market structure shift level. But if the DXY and the indices, that they are not always perfectly aligned in terms of inverse correlation. If you would trade Euro US dollar, yeah, I'd give you that. They're at least 90% of the time always moving hand in hand or in tandem, because on the Euro US dollar we would likely see something like this now, forming a high with a displacement. But really looking at the open, we should have seen a drop right here starting, or a drop on ES with the open. We saw that initially, but then we immediately should have seen the run to the upside after a very strong movement below Friday's low on ES. All we did was chop, and also on NQ, and we didn't really get towards our previous day's high. So really, if you compare the both, we have bearish SMT divergence between the DXY, ES, and NQ. But if we take a look at our Euro futures chart, we took out Friday's high, we're above that, we took out this high as well. Our market structure shift would come in here. I think that's, yeah, I don't know. Especially for the lower time frames, I wouldn't look for too much of a very close hand-in-hand correlation between the indices and the DXY. Overall, looking at the higher time frame on the DXY and just looking at overall market structure, which seems to turn bullish now, could also just be a retracement. Works if you scalp Euro US dollar, Pound US dollar maybe, but for the indices, we'll see. Sometimes it does, sometimes it doesn't. If you like it and those are your rules, then this would be your setup. Leaving behind the inefficiency, coming from the high of the day, having cleared the buy side liquidity above here. Didn't really confirm the market structure shift enough for me on the 1-minute time frame. Yes, kind of. But this very strong bullish rejection would, yeah, I don't know, give me some doubts. We will see. We keep an eye on it. See if we close above immediately, ignoring bearish order flow right here. Don't see that similarity in ES. NQ, YM is doing sort of its own thing here. One-minute time frame. Respecting bullish order flow. Yeah, no. Trailing max drawdown 48,000, not being calculated intraday. Dashboard will update after the New York session. Yeah, but really looking at the funded account comparison. So once you're funded, trade day right now, that's why I'm testing it, seems like the best choice once you're funded. 4% max drawdown, end of day, while here we have intraday, even with take profit trader, it locks in. So once you pass the 4% threshold in profit, so once you made 4%, it locks in and it becomes static. Same thing goes for all the other accounts. The cool thing is that you, can pretty much withdraw every day if you want to. 5 minis is also acceptable. I mean, rarely we go above 5 minis on a 50k account. Daily payouts, news trading rules. My favorite has been TPT, but also considering the evaluation comparison, we have a 5% target and a 4% ratio, which comes in at the lowest ratio comparing all the other prop firms where we have a 6% target. So we have lower targets, which theoretically makes it easier to pass. Apex has the lowest ratio, 6% target with a 5% drawdown, so you can lose 2,500 for the 50k accounts. But you have the intraday calculated trailing drawdown, and you have to pay. Yeah, actually, looking at the Apex price without the 90% discount or 80% discount, it ends up being the most expensive evaluation challenge, 326 plus the activation fee. And even if you have a 90% discount and afterwards you pay the activation fee, you still end up at a lower price with TPT or trade day because you do not have to pay that activation fee. Hope that makes sense. Take a look at NQ, starting to reject. Let's look at DXY. Shifting structure, displacing. Let's see how this candle is going to close. We had a bearish fair value gap right here. YM is continuing lower. Here on ES, we rejected as well. But no structure here on ES. All we do is chop. I would avoid, or I would at least stay away from it on ES until we get that bearish fair value gap and cleaner structure where we close below some lows instead of just wicking them and immediately rejecting back to the upside. But yeah, DXY shifting structure to the upside, likely within the next minute. And NQ setting up like it is right now. Like we said, potential is there. Took out buy side, got really close to Friday's high. Could simply take out the relative equal lows right here, the midnight low right there for a 2-to-1. Could also just continue what it's been doing so far during the London session. I don't trade NQ, so I would wait for the setup on ES. What's the time? It's 4:30, so we have 30 minutes left in our kill zone. I doubt that we get a entry plus setup in that time. Is anyone in that NQ short? So we rejected off the rough area, closed above and then closed below the bearish fair value gap. I'm gonna go to the bathroom real quick. See what it looks like when I come back. All right. Coming back. We already rebalanced this 5-minute candle, so no potential for a bearish value gap. The DXY closed above, so we have that 5-minute market structure shift on the DXY. Let's take a look at EU here. EU also shifted structure below with a nice displacement leg. Breaker block, continuation lower. Maybe into these perfect equal lows right here, low of the day. Seems like a nice draw on liquidity. We're at the high, we took out the previous day, previous week's high. Had one last manipulation to the upside, so what we would do is measure from the high to the low using the standard deviations from ICT. We have very obvious sell side liquidity being down here, low of the current day. 1.5 standard deviations. Entry, fair value gap would come in all the way up here. Breaker block entry. 50% retracement entry of the displacement. To target sell side liquidity on this move to the upside. But the DXY is retracing now, maybe filling this bullish value gap before, doing the same thing here that we just spoke about on EU. But I think really looking for the correlation, that's just my opinion, works better between EU and the DXY. Than the DXY and the indices. Take a look at the 1-minute time frame here. Equal highs. 15 minutes still looks choppy. No sign of any bearish market structure shift. 1 hour time frame, neither, not at all actually. 1 hour bullish volume imbalance closing in 20 minutes. Only on the 5-minute or 1-minute time frame we could anticipate something, but yeah. That's not the type of price action that you want to see after taking out buy side liquidity. Simply consolidating. Look how all these closing prices end up being on one line, and every time we go lower than that, it's only a wick. Really, then it just helps to look at previous 2022 setups that you took on your chart. And going back to last Friday, London session, displacement, boom. That's what we want to see. Yeah, we consolidate, we take out the Asia buy side, also equal highs, leave behind equal highs one more time before we get the displacement, we get filled, and boom. Done. We could go back lower or further. First day, take out the low, leave behind the bullish value gap. We took that, Ryan, I remember that. We entered, I think on that same fair value gap. I was saying I'm looking for longs. I entered mainly up here and added a contract down here, targeting the Asia equal highs. Comparing that to what we see right now. Yuck. NQ pushing. Took out this little short-term high. Still have the input and here we're getting the push. Let's take a look at NQ. Take a look at the DXY. The DXY is retracing slowly. Strong push here. Let's see if we can take out that high at 4385. No, but I think with that last move to the upside now being 435, it's gonna be it. In case we get a potential setup that I look forward to take towards the end of the London kill zone, I will let everyone know inside the trade ideas section or tape reading section. But other than that, I think we're pretty much done for the session. We tried it, didn't play out. We're gonna be back for New York. We're gonna be back tomorrow. Tomorrow is a new day, a new chance. We have nothing to worry about. So I think, yeah, that's gonna wrap up today's London session. Poor price action, but we can't always expect the best price action to form. Previous week's high, previous day's high is less than 10 points away from where we are at right now. It's only 7.5 points, so really, yeah, even targeting a long above here. After orders, consolidation, maybe accumulation, could be in the cards. We will see what the chart's looking like once I'm back from the gym, starting the New York AM session from 8 a.m. until 11 a.m. New York local time. So from right here until here. If we manage to take out that previous day's high and get our reversal set up somewhere up here, I'd be a fan of taking that short towards the low of the day, equal Asia lows, for a little retracement, or simply a 2-to-1. Let's look at the standard deviations. One standard deviation 0.5 would come in right here. Yeah, that's gonna conclude it. Okay, guys, do you have any more questions? Otherwise, yeah, I will see you during the New York session. Doesn't look like we have questions, so thanks for sitting in here with me this morning. We will be doing this for the next 66 days and see what we can achieve being a consistent trader. Simply following the 2022 model. Maybe we can even get some payouts during this period of 66 days. We will see. All right, guys, until later during New York. Enjoy your little lunch break. And yeah, see you then. Bye.